Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the Senior Strategist for 𝗏𝗡. Today is Tuesday, October 5th, and today we're going to talk about the strongest sector, and I'll give you the strongest stock in the strongest sector, and I'll also give you the weakest stock in the weakest sector. But first of all, let me go do my analysis and give you a good idea of where we're going right now, or where we've been, where we're going, kind of give you a roadmap of what to expect. Market's going to open up in a little over 2 hours, about 2 hours and 5 minutes or so, give or take. We are beyond random. I like that, beyond random. So anything beyond, as I mentioned, anything beyond up 75 to 85 on the Dow is beyond random. So we are up 135, and again, don't take this upside as anything too bullish. We are in a very, 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 very choppy market. Put to call ratio is not really, we went down quite a bit yesterday in the Dow. As a matter of fact, the Dow closed down over 300 points yesterday, and now it's up over 100. But if you look at the put to call ratio, it's only down, it didn't even go up, it went down. So this does not feel like there's a lot of fear in the market right now. Matter of fact, let me just show you this right here. It's already back in the zone of safety. Let me just expand this a few days here. So anything above here is fear, fear, fear. Anything below here is complacency, and this is the first time we went into the complacency level. We're below 1 for the first time in a few weeks now, since beginning, or since middle of last month. Now, also, if you look at the VIX, which is the S&P 500 volatility, it's now also going lower. So although the market went down pretty good yesterday, all the internals didn't really feel it. Matter of fact, if you look at, let me go here real quick and show you this. If you look at, this is it. This is momentum levels, numbers of stocks trading above the 50-day moving average. We went down by 5% yesterday. We're already at 26th percentile, and we didn't break that mustard-colored line, the one I keep showing you, where we only went 1, 2, 3, 4, 5, 6, 7, 8, 9 times on the Dow composite in the last 15 years. So it looks like we're bouncing off, but I wanted to also show you that even if we do break it, I mean, look at where the downside is. It's not like we're breaking from here. We're already down. Remember, momentum levels have been going down since May, and I've been telling you so. If you don't believe me, just look at any one of my videos. Every single day I tell you about it, no exception. So, talk about global economy and what to expect. And by the way, while we're there, the big reports this week and today is international trades in goods and services. This will give us a good understanding of how the bottlenecks are impacting the economy. And we're going to have the ISM Service Index, which is going to reflect on consumer spending. And consumer spending makes up 2/3 of the economy. So keep your eye on the 8:30 report and the 10 a.m. report Eastern Time. Now, with that in mind, let's talk about global economy, and it'll reinforce some of the things that I've been talking about right now. So these are the biggest concerns right now. Inflation concerns. They're weighting in on sentiment, with oil at $78 per barrel. But I'm not that bearish. The fact is, usually when oil rises, economy expands. So I know we're having supply chain issues, but at least we need oil, right? It jumped after OPEC and allied oil producers stuck to a plan for a cautious increase in output despite surging global demand for crude. Well, maybe they don't want to be in a situation that they were in a year and a half ago or 2 years ago, where we had all this overabundance. So again, there may be a good reason for this. China-U.S. tensions regained the spotlight after U.S. Trade Representative 𝗧𝗴𝗀 said she plans a frank conversations with officials in Beijing about interim trade deal aimed at resolving a trade war. Do you think you can have a frank conversation with China? Catherine, think about it. You're dealing with China. You're not going to have a frank conversation with China. You may have a conversation, but it's not going to be a frank conversation. Rising energy costs and supply chain problems. Now, folks, I've been talking about these supply chain problems for 6 months now, maybe more, are adding to worries over inflation, in turn to concern over Federal Reserve's plan to trim bond purchases and eventually raise in benchmark rates, which they've already told us. They've broadcasted that they plan on doing it 3 times next year. On Tuesday, that's today, the Institute of Supply Management, that's this report right here. that I've been talking about. Just to give you a perspective, we'll release its service sector index for September. The service sector is the largest part of the economy, and its health is a key factor for growth. And on Friday, we have the employment report. Now, I want to show you the consumer discretionary sector, which actually has not been really breaking down that much in this correction. I want to show you this. Basically, everything is pointing to higher prices. Let me give you an example, all right? And maybe I'm wrong. Maybe I'm dead wrong about this, but I go by the things that, by the factors that I've been using for over 20 years. So for example, consumer discretionary is the most speculative sector. It made an all-time high 5 sessions ago, all right? Number one. Defensive sectors like consumer staples and utilities, they're not rallying. Volatility, well, volatility is at 22. Look, we're coming down. Dow was down 300 points and volatility went down. It didn't even go up. A fear zone? No, we fear it peaked out a week and a half ago, or even further. Yeah, 15 days ago, 2 weeks ago, we peaked out. The market barely dropped then. So there's not a lot of fear. All right. Put to call ratio is back within its zone of safety. Let me just show you this here. Back within its zone of safety. How about momentum levels, right? I mean, we want to look at everything. Momentum levels are real low. Look at Nasdaq 100, 14%. And most importantly, the smaller stocks, look at this. Look at that. Look at where we're at. How much lower we're going to go? We're like almost at the lowest level. We've been, I mean, 14% of stocks are trading above the 200-day moving average. Where do you guys think we're going to go? So it's puzzling. And if you look at momentum levels, look at large caps, 32% above the 50-day moving average. Look at small caps, 46%. You don't like the Russell? No problem. Look at S&P 500. S&P 500, 28% above the 50-day moving average. Small caps, 50%. I've never seen a bear market where small caps hold out or are stronger than large caps. They're more speculative. They go down further. So all of these things are pointing to higher prices, not lower prices. Now, I've got a treat for you today. Let's take a look at my crystal ball. I don't have a crystal ball. Well, I do, but don't tell anyone. So the strongest sector right now is the energy sector, and the weakest sector right now is industrial. And by the way, since we're on this topic, look at utilities. Is utilities all the way up here? No. How about consumer staples? Look, it's the 8th spot. Technology and consumer discretionary, which are next to each other now, finally, which means market is not as fragmented, and it's not usually on the way down, are tight again. Basic materials and industrial are tight. Consumer staples and utilities are almost. We've got this measly communication sector in between. But markets are fragmented. So the strongest sector is the energy sector. What's the strongest stock in the energy sector? Of course, I'm going to tell you. Devon Energy. I've been talking about this stock. Matter of fact, I highlighted the stock on 5/10 when it was at $25. It's now almost at $40, and it ran 5-6 days straight. I like the stock a lot. Now, would I buy it right now? No, I would wait for a pullback to the $30 level, especially after what we're seeing right now, maybe $33, low 30s. And then I would enter, and I would probably hold it till about 45. But I would get in the low 30s. So Devon. Now, what's the weakest sector? Industrial. What's the weakest industrial stocks? Stanley Black & Decker, SWK. Look at this thing. I mean, who wants this thing? So would I sell it now? No, probably not. I would wait for a pullback to the 183 level and then let this thing go. And I think once it goes, it's going to go. I mean, look at this thing. If it breaks the 168, this thing can go all the way down to the $98 level, which is very possible. Now, do I know that it will? I have no idea. But if you look at my stock fetcher, and if you look at my weakest stocks, all I did was I found the weakest industrial stock, which this is the weakest S&P stocks. So it's still within like the top 2%. And if you go right here, the strongest ones, look at number 2, Devon Energy. So as I promised, now I've got something for you that's really relevant, important, and timely. Yes, timely. Now, some people have never heard about the secondary market. It's a completely overlooked part of the options market that most traders and investors don't understand or even know exists. Now, Tom Busby, T-Buzz, he's widely considered one of the top traders in the world. And he's an amazing researcher in our industry. He published 3 books. He's been doing this for 35 years. And he's a great friend. And after trading these moonshot trades in his own account, and I'm going to tell you, Tom, whenever he talks about these moonshot trades, I see a big smile coming out of him. He loves these moonshot trades. Take a small account and blow it up into a big account. And after trading them for moonshot trades for his own account, he's decided to share this strategy with anyone who wants to up their game. And folks, this is definitely a time to up your game. Tom has nearly 40 years of experience with consistent track record in all types of market conditions, bull, bear, and choppy. So traders will want to have the strategy as we near the end of the year when volatility picks up. You are going to love this moonshot trade. And when you see Tom talking about it, notice how excited he gets. He loves these moonshots. Click on the link below and see how you can access these moonshot trades and learn more about this little known secret. It's a little known secret, but it's between us, all right? And don't forget to subscribe to this, to like this video, subscribe to this channel. You guys know what to do. I want to make sure you get all my morning videos. Now, how are you going to do that if you're not notified when a new one comes out? Duh. So subscribe to this channel. When a new video pops up, you'll know about it right away and you'll never miss a thing. And remember, Devon Energy and Stanley Black & Decker. I always deliver what I promise, the strongest stock and the weakest stock. You guys have a wonderful day and stay out of trouble. Bye.